Okay, let's start this thing. This Forex seminar, Jvfx seminar. Now, what we are going to learn this afternoon, we are looking at Forex, basics of Forex, and the different terminologies of Forex, the timing, the time zones, or what I call it, trading sections, and then we look at the candlesticks and so on. Now, let's move on to the first slide. What is Forex? Meaning of Forex. Now, Forex, as you can see, buying and selling of currency, meaning that you need two currencies before exchange will take place. The F4 is Forex, foreign exchange. So you use dollar to buy naira, you use naira to buy dollar. That is how Forex works. So without, it's always pairs. It's always pairs, except commodity like gold. Even gold itself is still related to USD. So at the end of the day, if you want to talk about Forex, we are saying if you want to go to US, you will need a dollar to spend in US. Then if you are in Nigeria, you are based in US, you need to change your dollar to naira and spend here. So now, then basically example is GBP USD, Euro USD, and so on. Now in Forex, we have so many different types of currency pairs in Forex. There are some like major currency pairs, minor currency pairs, and exotic currency pairs. So these are the types of currency pairs. So basically, if you want to trade minor currency pairs, they tend to have wider spread because they are not major. They are like all these Asian or ZJPY, for example, is not major. It's minor currency pairs. Euro USD is a major pair. I think I have another slide for that. Let's move on. So currency pairs, 7 major Forex pairs. These are the major ones. Yeah, can you see it? Euro USD, the US dollar, and the Japan yen. You can see that all of them they share USD in common. So New Zealand USD and so on. You can see them here. So those are the major pairs that we have. Then let's move on to the next one. This is candlesticks. What is candlesticks? Candlesticks. We use candlesticks to determine the opening price, closing time, as well as the high and low. Open, high, low, close. Open, low, high, close. Anyone would call it. Now, you need to know what candle is green, another candle is red. Now, we're using what candle is green is because it goes up. Price in that time frame goes up. Then why it comes down, why it shows red is because the closing time or the closing of that candle is below the opening price. So that is the bullish closes above opening of the candle, while bearish candle closes below opening of the candle. Example is slide 6. Look at this candle now. This, if they don't tell you the opening price, now you're supposed to know the reason based on the definition we used that time. This one is bullish. This is where it's opened at this point here and closed here. When this is the low of this candle, this is the high of the candle. So it means that this candle opened here at that time frame, because that time frame matters most of the time. Because as you see it here now, this can be 15 minutes candle. But as a 15 minutes candle, throughout the whole 15 minutes, this is what happened. Prices moves from here to here. So why this one is green is because it closes above the opening price. So this is opening price. This is closing. This is closing of the candle. Then between that 15 minutes, it goes up, come down, goes up, come down. It then closes at this point. That is to show this is called wick. From here to here is wick. From here to where is wick. Wick. W-I-C-K. So then this one is bearish candle, or I call it just bearish candle, because this is opening, this is where it opens. This is where it closes. So that's how I should do the candlesticks formulation. Now, let's look at the terminologies. Trading terminologies now. Do you know the meaning of pips? Do you know lots? Do you know margin and so on? Do you know what is one lot? Now, do you know it? You don't know it. Okay, now let me just talk briefly. Let me go to the chart so that you can see. This is it here now. Can you see this chart? MT5 or MT4. Then looking at this is 0.01. That is micro lots. The mini lot is 0.1. If I have to change it to mini lot, I'll put it to 0.1, 0.2, 0.3, 0.4. There is still mini lot. The standard lot is one lot here. So this is one lot size. Now, each of these lot size matters. You need to know the value. The person that is using 0.01 and the another person is using one lot, they are actually the same thing. They are not going to be losing the same money. They are not going to be making the same money. They will be losing different money, because the more the lot size you use, the more you will make money, or the more you will lose money. Now let's use the example of $100. If you use $100 to trade, you deposit it into a broker. The broker, you now have access to the account. Now, if you use 10 lots, no, if you use one lot on that account on GBP USD, it means that you are risking one pip, $10. So if it goes up, you will gain $1. If it goes to the favor, every pip will be $10. Using the 10 lots. One lot. Because now every lot now, if every lot here now, if I'm using lot is the $10, then 10 lot is $100. That is I'm talking about the GBP USD and major pairs. So now USD JPY. Now looking at it now, I want to trade it now. I want to trade one lot for you to see that the reason why I'm using this one now. Let me buy here now. This is demo. So that we use an example. So let me sell. So as I sell now, from here to here, if it's one pip, I'm losing $20. Let me look at, okay. So let's look at it here now. So can you see it now? See amount here. So this is 1.7 pips. You can see the money I'm losing already because I'm selling at this point. But if I use 10 lots, every pip will be $100. So now, this is I'm losing $24 now because it is one lot I use. That is the size, the volume of what we are going to buy in the market. Now, let me close it. I use 10 lots. You can see it's 10 lots here now. So let me use 10 lots because this is $10,000 demo account. Okay? Now 10 lots. Now you can see it now. As I use 10 lots now, every pip is $100. This is not yet up to one pip. This is one pip now, $100 because I used 10 lots. The higher the more volume you buy, the more risky you are taking, and the more money you lose, or the more money you make. So if you don't envy someone who is using 0.01 because better person will not lose the account much, you will not lose more, but the person will also will not make much money. It's like you go to the market, you want to buy petrol, and then you buy one tanker of petrol. Another person bought maybe 1 jerrycan or 2 jerrycans of petrol, or those who are into black market. Now the person that is buying big volume, everything can happen to that thing. They take a crash. I mean, they can to and lose. Then at the end of the day, that will be massive loss. That is risk. The person that bought 2 kegs lost that one too. That one can lose just the money the person will lose will be small. But if you are buying 1 tank of petrol, the money you will make on that tank it will be much more other times than the person that bought 2 kegs and sold. So that means you need a big capital to be able to make more money in Forex. So let's move on to the next one. Leverage. So let's look at leverage. Leverage as a way of making it to open position more than you require. Now, with 10 lots, there's a position you cannot take in the market. But because of leverage given to you by your broker, you'll be able to open 7 positions. So that is just it. The margin is the capacity at which you can buy. The more with the margin, the more you need to buy, add more positions in market. Then edging here, what do you mean about edging? When you say edging, you buy and sell at the same time. Or you have sell positions, you also have buy positions and sell positions at the same time. That's edging. That's why some people used to edge, meaning that they will buy and sell at the same time. But professionals don't do that. They tend to not do that. It's only those who do hedge funds, those who have big money, big capital, those who are dealing with billions of dollars in the forex market. Those ones they can hedge as they like. When the money is too big, like they can't lose, they can only wait if they draw down. That's why you just see market to just move, boom. At times just spike and come down because they close their opening positions, and so that's how it works. Now, if you look at it now, then the another thing is PIP. PIP is example of PIP is let me give you this one. PIP. This is PIP. As it moves from 66 to 67, it is going to be 1 PIP. Each PIP. This one is pipette. This small one, you see that small one here is pipette. So 64, if you move down to that 1 PIP down, that is how it works. So each PIP, the more it goes up, the more the pips it goes up. I mean, the more pips you see. So the value of what you are buying now determine how much money you are making, how much money you are losing. Then I'll be asking him a question if I have any questions, so that it will not be just one way. Then I believe that you're supposed to have some little idea. Then bid and ask. What is bid and ask? Is sell and buy. Bid is sell and buy. So let's look at the example again from this here. Now this is bid, this is ask. This is the amount of money. This is the amount of money you can make. Yeah. Now, look at it here now. This is the time the market want to sell. This is where if you want to sell here, this amount you are ready to sell it. That is bid. And then this here is where you are ready to buy the something. So now, let us look at another one. All this one are just basics because we need to get some rudiments, just spread. The spread is about the difference between buy and sell, the bid and ask in forex market. Then volatility, talk about volatility, how fast our market is moving. Is it rising, is it falling, how fast it is that is going up and down. Then talk about the different types of people in the market. Day traders, scalpers, position traders, swing traders. Now, scalpers are those who trade within a short period of time They will just enter market, buy now, and before you know it, they will sell again. Within 30 minutes, 10 minutes, 5 minutes, they just put it buy, they just make money through the short distance, small profit, small distance in the market. Then talking about day traders, those who trade today, then before the end of the day, they will close the market. They will close their positions, running positions. Either they are in profit or loss, they will close it. They tend to close it. Then looking at the swing traders. Swing traders are those who tend to leave markets. Those who tend to leave markets, leave their positions for 2 days, 1 day, above more than 1 day, 2 days, 3 days, 4 days, at times a week. They will leave it running because they want to swing the trade. While position traders are those who trade once in 3 months, in a month. They only trade once and leave it for a longer period of time without bothering to check it out and do anything about it. Then let's move on to the next one. Or before I move on, if you have any questions about it, if you are getting the basics of what I just read. So let me ask question. So you are free to ask questions.
I want to know when is the exact time to enter into market for a beginner? When is the exact time? If I'm looking at the charts now, when can I enter into the market? When can I trade? And there's other thing they call this thing what was it? Signal. How do I set my signal? These are the things I need to know.
Okay.
Then there's another thing. This risk management. You understand? This risk management is a very important topic.
Yeah.
You need to know.
Okay.
All about this.
Now, when you should enter market, and then when you should enter, now, until you study candles very well, all these candles you see, doji, pain bar, armor, shooting stars, bottom tweezer or top tweezer, then different kind of names, there are a lot of them that it will show. Now, where you should enter does not determine by you or what you think. It determines about the ability to understand the candles. That is what you to enter, what is telling you. Now, there's sometimes that some people want to see action that take place. What they call bullish engulfing. They want to see bearish engulfing before they enter. Some people want to see doji, meaning that the meaning of doji, the long wick and short body, very, very tiny body. At times you don't see body. So sometimes some people want to see some patterns, meaning that patterns like double bottom. Some people used to be like double divergence. Some people use divergence, meaning that different kind of signals. But that's why you need to know more about candlesticks. You need to study candlesticks and then to know your time frame. Now, talking about time frame, we have 5 minutes, 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours. The other hours, if I use MT5, but those are the major hours. Then daily, weekly, monthly. Now, talking about more those who are into as a day trader, you don't need a business with weekly to trade. All you're looking for is opportunity on daily basis. So, but those who are into position traders, they don't have business with going to 5 minutes because their trade is long time. Their entry can be in the 4 hours candle. That's where you need to know more about different time frames. So, continue. I ask.
Now, who are the short-time traders? Who are the long-term traders?
Short-term traders are scalpers and day traders. Now, what makes you a scalper is what you do in the market. It's not that you give yourself just the title. It's about what you do. If you enter position now, in the next 10 minutes, you close it, you are more of your scalper already. So what you do, your activities in the forex market, in the chart, will determine Either you are scalper or you are not. But now, as you can see now, the forex is changing every now and then. It's called fractal. So you have to know the position to enter and to get out. So then they trader too. They are short-term traders. They trade today and close today. So
okay, now are you telling me that it is for a long-term trader and a short-term trader? Is there any advantage ahead of being a long-term trader and a short-term trader?
Now,
is there a possibility that a short-term trader is apart from more losses and more profit? Yes, is on the right path.
Now, if you look at it now, your money, your capital will determine either you can be long-term trader or not. If you have $100, you can never be position traders, because how many years do you want to spend before you will be able to make a lot of money? Now, in forex, there's some things we look at. Percentage. 10% of $100 is how much?
10% of $100. That's $10.
2% of $1 million is how much?
2% of $1 million. That's
$20,000. So somebody who has $1 million capital can just look for 2% and trade and leave it for weeks, months, that 2 months, 3 months. So if they say, hoping that it will reach the target, that 2%, it is just the 2%. The person, we don't need to be trading every day. And maybe start to trade every day, but you can just leave this and leave it, let me just leave it. And so you know it, in the 2 months or 3 months, if it's $20,000, you that have $100, if you make 100% of $100, you don't never make anything compared to somebody who has $1 million that just make 2%.
And his risk is very low.
Our risk is very low. If you don't make the risk very low. So now the reason why we are trading every day is because our money is not much, and we're trying to catch as much money, movement. At times, sometimes in the day, today now you will not trade. You don't need to trade if you don't see your setup. But because your money is not, your capital is small, you may not want to. You will just jump into forex and enter. Even when there's no opportunity in the market, you still want to trade because you just want to $20, $10, $10.
But you know there are some people that give signals.
Yes.
Now, as a beginner, can I be receiving signal from maybe a broker or all these vendors? Can I be receiving a signal and be setting it into my trading in order to build profit? And what is the possibility of a signal? Does the signal give guarantee? 100% guarantee of profit?
No. Signal does not give guarantee. Signal is, you are only following somebody. It's like you are copy trading. You are copying the trading of the person. Now, how much you are risking? How much you are risking per trade will also matter. If they send you a signal and they say 10 pips stop loss, now your risk, how much are you ready to risk, will also contribute. Because there are some times that they will change their mind, but you will not be aware. I can tell you 20 pips they take profit, but they can close their trade in 15 pips because they have seen sign that it will not reach 20 pips. So if they take their profit or partial profit, whereas you are still there, before you know it, market will reverse and clear your stop loss. That is how it is. Anybody more question? Because there's no guarantee. There's no guarantee about signals, but there's also, it depends on the signal providers. you are dealing with. So, any more question about it? So now let's look at this now. So let's look at this. The next one is market execution and pending order. This market execution, is when you are in the market. Say when you are in the market now, and you want to trade immediately, you will just press it here, sell. That is called market execution. You execute it as the price just comes. So you don't need to wait for longer time before you make the decision. There's no need for this thing. There's no need to wait for market to go up or down. Now let's move on to the next one. Market execution and pending orders. Now, there are pending orders in the market. If you feel like you don't want to sell now, you are waiting for market to go up before you sell, you put a sell limit. This sell limit here to sell above current price. Now it's at 1.2000. You want to go to 2.0350. You may put it at the top, hoping that price will go there and touch it. But sometimes price will not touch it, and that is just how it is. Before it goes in your favor. Then there's buy stop. You buy at above price, current price. You want to buy now? It's here. See, this is sell limit here now. Sell limit. This is current price, but here how to sell here? Sell limit is here. Can you see it here? Now the next thing I can do is the buy stop. I want to buy above this price here. I can put it there, buy stop. Then sell stop. How to sell below sell below the current price. So that I can put it here. So I don't want to sell it now. I want it to go down before I sell. I can do that too. So if you look at it here now, those are the pending orders in the market. Pending orders, meaning that you sell price above or below the current price. It's not the same thing with market execution. So any question regarding that? A lot of people use it because they believe that markets will still go against them, or will still go to their areas where they want to, their zones where they want to take trade.
Where they set signal?
No, it's where they believe that price will go before they sell.
It's still like signal.
Yeah, it's not a signal, it's strategy that requires you to wait for price to meet you at where you want to enter. So that is it. But so at times some people we put buy stop. They expect price to not go above this level. But if it goes above this level, they'll set it that buy. Once it crosses above this level, buy. So they now put buy stop. It will now be above the current price.
So it's for those who doing auto trading or what?
Is that those people who want to exercise discipline, they don't want to enter trade. Now they want to exercise patience for the price to go to the place where they want to enter.
Is it under risk management?
Yes, it's more of under risk management. It's only related to risk management because they are trying to reduce your risk. You don't want to be the drawdown before market will reverse, and because market Forex is 24/7, 24/5, not 24/7. Market is 24/5, meaning that from Monday till Friday. So now the time when market will reach your target, it could be on Tuesday, and because you will not be on the chart, you will just set it there that sell limit or sell limit, meaning that once you reach there, anytime, either tomorrow, today, or tomorrow, As long as it reach there, you want to sell. It's the same thing like take profit or stop loss. The difference is that stop loss is you want to reduce your losses. You believe that a market should not go below or above a certain level. If it does, close my trade for me. In loss, just take it, just close it. So that instead of to lose $10,000, let me lose $5,000. But sometimes market can reach $6,000 and reverse and go in your favor. But at the end of the day, everything happens. You have to know what you are doing in the market. Any more question? So take profit is close to close profit at specific price. Is a place you want to close price if you buy. Now let's look at trading hours. 24/5. I've said it. First trading session. Then there's Asian session. Asian session involves Sydney and Tokyo. In the night, when Nigerians, when Africans countries that are sleeping, those who are in the GMT, even London too self, those who are in London, they are sleeping, they are snoring, the market is still moving, it's still doing anyhow. So those periods, in their own, they are in their day. They're just opening their own markets. And activities are already going on while we are sleeping. So when we are now trading, then they will be sleeping, they're about to be yawning, ready to go and sleep. Because that is their time. So they call it Asia session, London session, and New York. New York session is when US opens. And then there are a lot of more volumes in New York because of it elapsed between London and New York. Yes, there elapsed. It happens around 2 opening up. So there will be more volume. A lot of more people will be coming in the market. So that is how it is. That's why it's New York. Then any question about this one? But some people don't like to trade in this session because of volume. Volume, market don't move much, especially when you're trading major pairs. It will move like 20 pips averagely, like 20 pips, 25 pips. Whereas in London, it can move like 60, while in New York, it can move like 100. Can you see that? So, and it's through the movement that you make money and you lose money. So it's not only, so the movement as it's moving, that's how you are making money, and that's how you're losing money. So now let's look at this stuff here now.
Someone in US, does it have advantage more than person in Nigeria?
There's no advantage at all. In Forex trading, the only advantage is that the person may be waking up maybe during the time of their own session. So you that you are here, as long as you have access to the broker and you can have access to this chart, you have access to this chart, you are as good as the person that's in the US. Location there's no barrier, but it's time zone that used to happen. Time zone. Now this is hot now. There they are just waking up. So as they're waking up around that time, that one, their body will be fresh. While you are this sun is already about your brain. Your brain is already maybe melting or getting hot. And that's maybe the only thing that this is. But there's no advantage. And that person may be any more money in dollars. So that is just it. So let us look at the next one. Market environment, trends and ranges. Now there's what we call short trend and long-term trend. Every day market is moving, is trading, and it's ranging. Now, if you look at weekly, you will see that there's also long candle. There'll be long candle. And then in that long candle, there'll be a lot of higher low, higher high in the market. You get it now? So trend is defined as when market is moving from one making higher high, higher low, higher high, higher low. How does it work? It's moving like this. Go up, come down a bit, go up, come down a bit, go up, come down a bit. Meaning that it's breaking the structure, the previous structure, and we continue to go like that. And then I will use the word impulse correction, impulse correction. Now, what do you mean about impulse? When there's a movement that goes up, the correction will now be short, a bit slower movement, a bit before you can make another impulse that will break the structure of the IRI. There is something opposed to lower low. When you're going down, it will make lower low, lower high, lower low, lower high, lower low. So it will be breaking the previous lower low. And it's this move, all these things, they are displayed here. Now, I will use an example of this thing here now. See what happened here because of count. Let me use 15 minutes. See what happened here now. See. This is more of like ranging market now. We're in ranging market. Yeah. It's because of the screen issue that I could not display it very well. Now, what do we mean about range? Meaning that price is bouncing, is going up, come down, it go up, come down, not on a straight line, but it will form a bit consolidation. Meaning that it will move in sideways before it goes up, still come down again, go up, come down again for a period of time. So for you to be good in Forex, as a Forex trader, you need to master your timing, when to enter and when to exit. So it does not matter either you want to trade, want to trade daily, but make sure you know your time frame. And your time frame are communicating to you every now and then. Now, in Forex, there's also what we call average daily range. This is not part of what I put here, but I will just talk about it. Because so that you can make profit. The rest of it, you want to let Forex that want to make profit. You want the Forex to just feel like I want to be there, I want to be looking at the chart. Chart is boring, but the money is sweet. So now, in a day, market has a way of moving. At least in a day, it's moved certain level. Every pair has that kind of average daily range. Meaning that in a day, we are expecting market to move 60 pips, 70 pips, or 80 pips. But sometimes, some days it will not reach. Some days it will extend above that range. So, but and again, because of market, they don't want it to make money. They can push market to one area to deceive you as if they want to buy. Before you do it, market will bounce back and go down. Why is it like that? They used to use the word AMD. Accumulation, manipulation, distribution. So in the market, you will see that plays out. When market will move in one area, before you know it, you think that it's buying. You buy, before you know it's come down. But at times, because of news, it can keep on going. Instead of to come down, it will not come down. It will still be going up. Those are the issues about fundamental aspects of Forex. Now, when Trump is speaking now, you just notice that market just move one area, the sharp movement, perhaps to clear people who their stop losses, where they are putting their stop losses. But you know, this is Forex. It's so big. It is going up today. Today now it is going up now. Today it was really supposed to come down. It now start going up again. So now as it's going up now, it may come down before the end of the today to this level here. But because market is not only technical alone, there's also fundamental aspect, which you are not under control. All these power speech, like for example, before you say good afternoon, 100 pips, 50 pips, the market has moved. Why? Because the banks are waiting for those periods to push the price to where they want to push it. But as you can see, this trade, I'm in a position already, and it's already going up. Despite the fact that it's supposed to come down, but it's not coming down. Today now, there's no more news from the beginning of today. So now, I'm expecting this market to come down because I'm trading in my profit now. You see it here now. I'm in a trade. So, so I'm in a trade now. This trade, I'm using 40 lots on in this market now. 40 lots. No, this was a demo. My own real one is I'm using 40 lots. Yes. So now, with this 40 lots, every pip is $400.
Every pip.
One pip like this is $400. 40 lots. Then if it goes to other pips, if it goes to your favor, other pips, that will be $40,000. Then if it goes against me, that will be $40,000 loss. That's how it works. So, do you have any question more? One question? Now, we are not talking about this strategy yet. Oh. That's a strategy. Oh. We are not talking about strategy yet. So, no, we're not talking about strategy. We're not talking about market psychology. We're not talking about risk management. We're talking about money management. So now, in Forex, there are a lot of more than hundreds, more than thousands of strategies. Do you know what I'm saying now? There are more than 100 to more than 1,000 strategies, but they are not going to appear to you every day. There will twist. There's a way that it will move. It will confuse you. If I expect it to be double bottom, it will just clear that bottom and go back. If it says that it is going to create lower low and go to lower high, it will not go there. It will just keep on going down. Now, I will tell you, I'll just discuss few of the strategies. Now, the reason why I'm a bit more confident about the trades I use 40 lots is that the market has moved some levels. So today, I'm not expecting much market to move again. So I'm optimistic that it shouldn't go more than certain level because it has moved today, and it has moved close to the daily drawdown, average daily range. So now, for me, market is also now ranging. We're at the end of the month. I'm telling you the things I'm taking from my own trade, why I told my trade. Now, market has moved 441 pips this month. According to the statistics or the data I gathered, market is supposed to move 414 pips, but it has exceeded by about 25 pips extra. And then we still have today, tomorrow, and next tomorrow, 28 before it will close. And the way it is now, it is finding difficult to go up more. If not because of the movement that moved so far this month, it would have gone more because of the Trump kind of issues as discussion. Now, let's look at it here now. Can you see now? Today now, it has moved 72 pips. Average daily range is what? Can you see it? Can you see it? Tell me. No, that is not. That is the point I'm talking about. This is pipette. So it's 73.4 pips. So, or you can call it 734 points. They use points. No. So if we are using pips, it's 73.4 pips. That is average supposed to move today, according to the 10 candlesticks. Maybe we can do 10 candlesticks. Meaning that 10 days, within 10 days, averagely, it has moved. Then now, looking at it now, see this movement. Let me show you something here. Market, look at it here now. Market, this is the opening of today's something. It cleared this point here. It cleared people down here. People who put stop losses here, it cleared them. It now goes up. Now it goes up here now. I'm expecting it that it's come down again. For this week, for this month, because this month now we're on Tuesday already, Abby. So I don't expect the market to move too far from here. Even today there's no money. So maybe tomorrow it may come down. Maybe tomorrow it will now go up. But I don't see that it has been exhausted. That's what I call exhaustion in the market. When market will move. It gets to the point, it's just be moving like see if the market is wrong. You want to go up, it doesn't want to go.
Is it when the president talks?
Yes, there a lot of news. A lot of news. Now I will tell you the website, forexfactory.com, or my Forex book. My book for Forex is my Forex book. There are two places where they usually show you. They show you there's high impact news, medium impact news, and low impact news. But currently, today now, there's no news again, except maybe president's invitation or having meeting with different people. And the way it is now, if I were to swing this trade now, I'll be making close to $40,000. If it does not go above, if it does not clearly go up above this level, if I leave it for other pips alone, just other pips, I will make average $40,000. But if it goes against me, boom, I'll lose $50,000 now. So, but because of I don't see there's no reason for the market to go up beyond this level. Okay.
Are you not making your profit?
I'm losing because I'm selling.
You are selling.
Yes. If I'm buying and it's going up, I'll make money. But because when you sell here, you are making profit when anytime price is going below here. But when you sell here, it's going up, package price is going up, you are losing. So it's for you to know when to enter and when to get out of the market. So any more question? Now we are not talking about any strategy yet. And then we need to understand that Forex, you need to know from the foundations. It's like doctor prescribing drugs to patients. If you want to become doctor, you need to learn the language of doctor. The same thing with of medicine and all these pediatricians, all the different doctors. So now you need to look at this thing very well. You need to know the languages, what they mean. You don't just enter market because you feel like you want to enter market. You need to study very well in such a way that when you don't enter market, you are relaxing because you know what you're looking for. So everybody is trading, is buying, but you are just waiting. You're just waiting because of what? You have the information that what you are expecting, criteria for your entry is not yet on the chart. So because of that, you may decide to leave market, wait. Everybody is trading, you are just waiting. Study markets. But when you now see your entry, once you trade, your mindset, your psychology will be intact to undo it, because you have done your best. And your best may not be enough, but just make sure you have, based on your understanding of market and the understanding of the candlestick patterns. Are you getting what I'm saying now? You will be able to have mindset to stay in the market for a longer time. So now, let's look at it now. What do you think that will happen? Do you see this candle here? Let me show you something now. See this candle here? This is a candle of selling signal. Selling signal. This two candle here. 1, 2. It is selling signal. So now, why is it selling signal? Because this one, it has shown that it's called crosswalk way. So for me now, if I want to enter more entry, I will sell. I will sell because market has gone up. And then at this point, this candle I'm seeing here in 15 minutes is a candle, but that is showing me that you want to sell. So any more questions before we go and break? Then we continue shortly. For now, no questions. So this is first segment. I need to take a break to sip water, and then we will continue.